All right, let's talk about the accounting equation. You could say that all the financial statements are based on the accounting equation. It shows the relationship among assets, liabilities, and owner's equity. And the accounting equation is simply assets equal liabilities plus owner's equity. The accounting equation not only is the basis of our financial statements, it also helps us learn about double entry accounting, debits and credits. We'll talk about that in a little bit. But for now, we just need to remember that assets equal liabilities plus owner's equity. Assets are things that we own that are going to provide future benefits. Liabilities are things that we owe. The difference between what we own and what we owe is our equity. So I start up my own business. First thing I do is borrow $600 from my uncle. I take $400 of my own money and I buy an iPad. The iPad is an asset. It's on my books for $1,000. The liability is the money I owe my rich uncle. That's $600. So my equity in the business is $400. And if I were to prepare a balance sheet at that moment in time, it would look exactly like the accounting equation. The exact title of that equity depends on the organization. If it's a sole proprietorship, it would be called owner's capital. If it were a partnership, they would have multiple owner's capital accounts. If we're talking about a corporation, it would be called stockholders' equity. Let's pretend we're talking about a corporation, and let's look at some business transactions and see how the accounting equation stays in balance. So first, we sell some stock to investors to start a business. So now they own the business. What's happening in the accounting equation? Assets are going up, cash has increased, cash is an asset, and stockholders' equity has increased. They've invested money in the business. Assets went up by one amount, stockholders' equity went up by the same amount, so our accounting equation stays in balance. Next, we cut a check. We pay cash for a monthly rent. What's happened to assets? And what's happening to stockholders' equity? They're both going down. Assets are going down because we have less cash. Stockholders' equity is going down because revenue, sales make owner's equity go up. And expenses make owner's equity go down. In this case, we call that owner's equity stockholders' equity. Next, let's buy some equipment on account. On account means we're going to pay later. We're incurring a liability. That's called an account payable. So, assets are going up because equipment is an asset. It's something that we own that's going to provide future benefits. And liabilities are going up because now we owe some money on that equipment that we bought. And since assets are going up by one number and liabilities, what we owe is going up by that same number, our accounting equation stays in balance. Okay, let's do two more. Let's bill some customers for services performed. We've earned the money. We've satisfied a performance obligation. So we've sent out an invoice. That's called an account receivable. It's an asset. It means we're going to receive money in the future. So what's happening to our accounting equation? Assets, accounts receivable specifically, are going up by a number, and stockholders' equity is going up by that same number. Remember, revenue or sales make stockholders' equity go up. Expenses make stockholders' equity go down. Okay, last one. It's a little tricky. Let's purchase some additional equipment for cash. Why don't you pause this video and see if you can figure out what's happening to the accounting equation. I hope you got it. The asset equipment is going up by one number, and the asset cash is going down by that same number. So our accounting equation stays in balance. Whatever the form of our business, sole proprietorship, partnership, LLC, corporation, the accounting equation is going to hold true. Assets, things that we own that are going to provide future benefits, equals liabilities, things that we owe, plus owner's equity. Or stated another way, assets minus liabilities equals owner's equity.